as mortgage brokers, we'll sit down with a client and we'll review their mortgage, we'll review their life insurance, their buildings and contents, private medical, income protection, say for example. That's fantastic. And then when you do the mortgage planning, that's, put aside, we've done that, get to the protection planning stage of things. And, a client will take life insurance off you day in, day out because it's cheap as chips. You talk about critical illness and it's a bit like, that's an expensive product, isn't it? A little bit. And then you get onto income protection. They're like, oh my God, that's absolutely extortionate. I'm not paying that. And then you have to kind of like bring them back down to earth a little bit. Say, well, come on, mate. You're a self-employed builder. What's going to happen to your family if, you fall off that roof and, worst case scenario. And they're like, oh, it's not going to happen to me. Or they say, the typical one is, I can't afford that. I'm not paying that. And then you'd look at their income and expenditure sheet from the mortgage and you think, oh, come on, mate. If you stop spending 200 quid a month on, Uber Eats and £100 a month on that gym membership that you don't use. And I can see that you're going to Greg's every other day and you're getting your breakfast. And I know that we've got the analogy of, like a coffee a day or buy your life insurance. But I mean, who really listens to that? But when you think about it, like, for example, I know this is not written in stone, but as brokers, when we review somebody's mortgage and let's say they're paying £1,000 a month, and you go and put them onto a new 2-year fixed and it's 900, fantastic, they've saved £100 a month. And as brokers, commonly we'll say, that's great, you've saved £100 a month, but let's scrape that back and let's use it towards your income protection because you really need it. And 9 times out of 10, they'll be like, yeah, all right, go on then, because they don't miss what they never had in the first place. So we already apply that principle with the mortgage. So I thought to myself, well, hang on a second. This is a really great model that we do with the mortgage aspect. What else from this income and expenditure could we rearrange or move about to, help give more expenditure and more facility to buy other products and services? When I actually looked at it, if you combine together, energy, broadband, mobile, home insurance, boiler cover, those things collectively are the second largest outgoing of a property. So if we can reduce those costs down, effectively, the savings that we make there, we can reallocate those savings over towards life insurance. And let's be honest, most people don't have any loyalty to their existing utility providers, do they? So they don't really care. And most clients that I spoke to, they were like, yeah, sure, if you can, reduce those costs down, it's no hassle for me, crack on and go and do it. So I started doing that and I got a really, really good reception from it, because clients were like, yeah, sure, if it's, no hassle to me and you can move it about, then it's fantastic. So yeah, that's kind of the whole reason that it was started in the first place, was on a one-to-one basis. And then I thought, well, hang on a second, why aren't more mortgage brokers doing this? This is like a fantastic analogy. It's great for the client because they're getting reduced expenditure, they're getting more family planning protection. It's even better for the broker because they're getting a much more healthy suitability report out the back of it. And from a commercial perspective, they're earning more commission because they're doing more indemnity life insurance. So literally the only people that are losing in this situation, it's just the old utility providers, which again, nobody's got any loyalty to. So it was literally a win-win situation. So that's when I took it upon myself, thought, right, more brokers need to do this. This is bloody amazing.